Hey, good morning, everybody. It's Mike. It's Monday morning, 9:30 Chicago time. Depending on where you are around the world, thank you for coming and joining today's presentation. We'll be talking about the new Orderflows Trader 7 that's on GoCharting.com. Now, GoCharting.com is a web-based platform, and what really makes it special is now you can trade the American markets through it. It connects to AMP, Iron Beam, as well as crypto exchanges. So, if you're in America, it's something that you should definitely check out. And what I'm excited to talk about is my order flow indicators appearing on GoCharting. Okay, so just a brief disclaimer, as we get started, because I do want you to understand, trading does involve risks, and we're all adults here, and we all understand that you shouldn't be trading with money you can't afford to lose. Now, for those of you that are new to who I am, my name is Michael Baltos, and I've got over 25 years trading experience. I started in the early 90s on the CME trading floor, back in the days when there still was a floor. I started literally at the bottom of the industry with Dean Witter Reynolds. I was a runner, and eventually I worked my way up to clerk. Then after I realized that the floor trading, well, I say I realized floor trading was going to end at that time, but what was happening in the early 90s was electronic trading was starting. And being a kid in my 20s, I realized that's where I wanted to be. And so I left the trading floor to work on the trading desk at Dean Witter. I worked overnights trading Globex, Project Day, NYMEX, Comex Access, the electronic markets, as well as the international markets that were open overnight. After several years trading on the macro trading desk there, I left to join EDF Man in Chicago, right? Which EDF Man is a big English trading company. It's been around since the 1700s. Then eventually I left to get my Eurex trading license at Commerce Bank. I was a licensed Eurex trader, one of only a handful in Chicago at that time. What was happening was Eurex was trying to break into the US markets, and the Board of Trade said no, you couldn't do that, and they put a moratorium on Eurex terminals in the US. But fortunately, I already had my Eurex license, and we at Commerce Bank we had a Eurex terminal, so I was one of only a handful of people that can trade Eurex directly through the exchange without having to go through a broker. Then after September 11th, I took some time off, joined Cargill. I was head of the futures trading desk in Chicago, and eventually I went to Singapore to set up a trading desk for Cargill when the exchange closed there. And after doing that, then I joined JP Morgan in Singapore, where I spent close to a decade there as vice president of futures trading. In 2013, I left JP Morgan, started trading for myself. I was using order flow. And after a while, I met up with a programmer and I said, hey, you know what, this is how I use order flow. Can you put it into um, software so that it would help to analyze the order flow for me, right? Because I mean, at the end of the day, what is nice about software is, you can program it to show you certain things, and there were certain things in the order flow that I like to look at, and we started putting it into software, and that became the order flows trader software. Now, originally it wasn't meant to be sold. It was just meant for my own trading, but talking to traders, they saw it, they wanted it, and that's how order flows grew from there. So that's just a little bit of background on me. So, you understand, where I'm coming from and the tools that, we've created and why we've created them. So the nice thing about GoCharting is you can say goodbye to cluttered desktops and hello to GoCharting, which is an all-in-one web-based solution for trading as well as order flow analysis. Now, I don't have any slide decks. This is it. This is basically all the slides I get. I got two more with the link to something which I'll share with you. So what I'm going to do is I'm just going to pull in the GoCharting platform here really quick and just go through everything here in real time. This presentation is being recorded. Okay, so you could refer back to it in case you have to leave, and it will be posted up on YouTube later. So GoCharting is a web-based platform, and the beauty of having a web-based platform is you can access it from anywhere. I have trading platforms that run on desktops, and what sucks about that is you got to be sitting at your desk. You got to be sitting in your office or wherever, or maybe you're on a laptop or something. But the beauty is you could use GoCharting on a mobile device. You could use it on a tablet. You can use it even on your phone. I got a Samsung Fold, with the big screen, and when I'm out and I want to keep track of the markets, if I'm even if I'm not actively following the markets or trading, I still like to keep an eye on what's taking place in the market. And that's the beauty of having a web-based platform. Okay, and again, if you're traveling, it is great because no matter what country you're in, as long as you got an internet connection, you can access GoCharting. Okay, so let's just pull up a chart here real quick. Okay, and it's really simple to use. Okay, you'll see here. Close this down. Now, depending on what you have set up as your default, mine comes up as Nifty, but I'll just type in E-minis, ES, okay? And whoops, I think I gotta log in first. Give me a second here. Let me go back here because I didn't log in. You just log in. It's really simple. Again, you can create an account. On GoCharting, it's very simple. Okay, so there we go. So say charts. So before it said login. Go to products, go to charts, and here we go. Okay, so again, I don't, in the future I'll do something on Nifty, but I think most of you guys here today are more interested in some of the U.S. contracts. So we'll start with the E-minis. Okay, and just really quick, here we go. I just like to expand it out. All right, now there's a few things to note with GoCharting. Okay, is tick size. Okay, so what you got to do is there's this little cog here for settings. Okay, and I'll go to order flow because this is going to manage your tick setting on your chart. Now, there's auto mode, which I believe is the default, and then there's disable it. Then you got to set your actual tick settings. Now, for futures, all right, I like to use 1 tick as the minimum setting. This is a 5-minute chart. Let me just go down to a 1-minute chart so it's a little easier to manage. Okay, so here we go. So every tick is showing up. If if you're on a market like say NASDAQ, that has big ranges per bar, you might want to aggregate that into 4 ticks into 1 tick. And what that means, let me just I'll show you here real quick. Pull up a NASDAQ chart. Okay, you see, you can't see the footprint because there's so many prices per tick, or sorry, so many levels per bar, so many price levels per bar. What some traders do, what they like to do is they like to aggregate, because especially if you're watching a dome on NASDAQ, that like here, 19,608, there might not be any trades till here, 8.5 or something, because it just jumps around. If you're looking at the dome, you'll notice that basically the way it trades on a dome is basically 19,605 at 606, right? So what some traders will do is they'll just make this tick size 4. Okay, that way it's just makes more sense for them. Okay, now when you're aggregating ticks, I call it aggregating ticks, I'd still look at the same things in the order flow. Okay, so let's just really quick go back to E-minis. If you're new to trading U.S. futures markets, honestly, I don't suggest jumping right into NASDAQ just because of the volatility, and a lot of traders can't always deal with that. It's just moving around way too much for them. But contracts like E-minis, MES, the currencies on the CME, British pound, euro currency, Japanese yen, and even interest rates on the board of trade are all good starting points for traders. Okay, so once you have your chart up, Okay, now I'll be honest, mine is a default. If you were to start from, what we'll do is I'll start from scratch here. Okay, and I'll delete this just so it could show you how to get everything up and running very quick. Okay, so say you're starting here, right? Your candlestick chart. I'll just show you how easy it is to set up. You have a simple candlestick chart, and you want to add the Orderflows Trader software to it. Well, the first thing you should do is change the type of chart, right? You see here, you got different types of charts. You got line break, Heikin-Ashi, Renko, range bars. I use go to cluster. Okay, cluster is a basic footprint chart, and the Orderflows Trader software will run on top of the footprint chart. Because if you're looking at a footprint chart, you're looking at the volume traded on the bid, the volume traded on the offer, and for most traders, especially traders that are beginning with order flow, you don't know what you're looking at, right? You're not going to be able to make heads or tails of this because you haven't learned it. It's a way of analyzing the flow of trades that are going through the market. Now, when people talk about order flow, there's always the question of the dome, the heat map, or the footprint, right? This is a footprint. The dome is the depth of market, right? Which is showing you the volume on the bid and the volumes below the bid, the volumes on the offer and the volumes above the offer, right? And then you can see as it trades. But the problem with that is, right, we know that that can be manipulated. People enter bids and offers and pull bids and offers. What a price ladder or depth of market is showing is traders' intent, right? Yeah, if the market is trading, like right now we're trading basically 55.92, but if the market is going to trade 55.95, there's some sellers up here. Well, yeah, when we're trading 92, 3 points lower, if it trades up to 95, yeah, I'd probably like to be a seller too when we're trading at 92. But what you see oftentimes in the dome as you start getting closer, people realize that there's some momentum picking up, that the market is coming up to 95. Now those guys that's trying to sell at 95, they don't want to. Why should they sell at 95 if the market's going up? Then they'll move it up to 96, 97, etc. And the same thing with the heat map. That's just more of a visual look at the dome. But what makes the footprint so unique is that it is actually tracking the trades as they occur, right? The actual volume that's traded in the market. And that's important because when someone trades, puts on a trade, they're committed to the market. Eventually they've got to get out of that trade. Okay. So once you've added your cluster chart, you can see it up in here, right? It says cluster. Now you could I'll just show you what this is. There's these 3 layers, these little squares. These are what they call layers, okay? This is where you're going to control a lot of stuff. So if you want to edit it, right, and you can see what you have in here. There's a lot of things in here that you can adjust. I like to keep it simple, volume, point of control. I like to use value areas, but they also have tools like unfinished auction, if you want to look at that, candle body market, higher low marker, COT marker, delta divergence, cumulative delta. But I'll get into some of these later. But really what you want to do now, okay, is now you're going to add the Orderflows Trader software. So you see on here, order flow, right? You're going to click on this thing that says FX Study, open it up, order flow. Okay, and you see this one here, it says Orderflows Trader. Okay, so just click on that. And then you're going to go back to the layers, and I'll minimize this, and you'll see it right here, Orderflows Trader. Right? And these are the tools that are inside here. And again, each one of these tools is something that I've used in my own trading, right? That's why it's there. It's to me, it's very important information in the market. It's exhaustion prints, imbalance thresholds, ratios, slingshot point of control, market weakness, sequencing, market sweeps, prominent point of controls, zero prints, inverse imbalance, multiple imbalance, buying and selling tails, thin prints, okay? And really quick, I'm going to show you something else. Go back to the study. go to, hey, where is it here? Back to order flow, click on bar statistics, okay? And what that is, it's this information sort of at the bottom of the chart, okay? And just I'll just run you through some things really quick here. Now the bar statistics, right, is the important for me. I mean, there's a lot of statistics you can put on here, but one thing that I've had GoCharting add is these thresholds, okay? So, there's, to me, the important parts of the bar statistics is the volume for the bar, the delta, which is the difference between the net buying and net selling in a bar, or rather, let me rephrase that, the net aggressive trading taking place in the bar between the aggressive buyers and the aggressive sellers. Okay, so if a bar has strong negative delta, I know that obviously aggressive sellers are in a bar. If it's got positive delta, aggressive traders are in the bar. Okay, and then there's max and min delta, right, which are very important because that shows you how strong it was at one point in the bar. Max delta is how strong the aggressive buying was in a bar. Min delta is how strong aggressive selling was in the bar. Okay, so max delta can never be negative. Min delta can never be positive. And there's also delta percentage that I like to look at. Okay, delta percentage threshold is basically think of it as the strength of delta relative to the volume of the bar. Okay, and there are default settings 95, 5, and 25. Okay, and really what that does, it tells me, like for example, this bar here, you can see this is the delta percentage, 46.03. It's magenta colors. So that's telling me that the aggressive buying, this delta of 609 against the volume of 1.32K, 1,300, is very strong, right? Because again, every bar has a delta, every bar has a volume because there's going to be volume traded, but most of the time it doesn't really matter, right? It's just the market doing what the market's supposed to do. It's facilitating trade, but there's times where it's just very strong, either positive or negative, that can give you a clue as to the near-term move of the market. And you can see here the market, started going up from that area. Some of the other numbers, just really quick, just discuss them here. Right, you can see this delta is cyan color, cyan color. This one is magenta color. We got magenta color, magenta color. If it is cyan color, this blue color is telling you that the delta number itself is a strong delta number. And when you start seeing numbers like this around a low, this is a nice swing low came in here, what it's telling you, aggressive buying is coming into the market, right? So, I mean, if you just see the cyan color delta, then you know the delta is strong. But when you see it sort of coming in right around a low that's been made, well, what's that telling you, right? You have aggressive selling coming into a low, which is what you expect to see, right? This bar here, it's got this magenta delta minus 1.5K. So I know that that's a strong negative delta, but we're already going down, which is what you like to see. Now you see it sort of peter out. This bar's got a small delta of -5. This one's got a strong delta of -383, but aggressive buying is starting to come in, and not just aggressive buying, because this delta could have just been, 200. Okay, I wouldn't blink an eye at it, but it's 684. It's magenta color, and the reason what makes it so strong is because it's closing near our max delta of 694. It's closing within 95%. So I know markets come down on strong aggressive selling. Now you got to be thinking, okay, are we going to keep going down, or maybe are we going to go sideways or reverse? But now that I know there's strong aggressive buying coming in by looking at this delta, and again, if you weren't using these tools, you sort of have to just stare at your chart and try to figure, is this delta, does this one matter? Is this important? But I know that since it's colored cyan, I know that it's strong. Okay, but maybe you're not convinced that this bar is strong because it's a small green candle. It opened, went a little bit lower, went higher, and pulled back. Okay, well then the next bar, it's a nice big green bar, And it's got a nice strong positive delta, 764. It's also cyan color. So I know it's closing near its max delta. That is a sign of strength in the market. And again, where is the strength coming in? It's coming in at a low, because remember what price is, right? Price goes up, it goes down. If it goes up, it's going to attract sellers. If it goes down, it wants to attract buyers, because price will go down, 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 down until it could attract buyers into the market. And once it attracts buyers into the market, what happens? Well, you know, buying is taking place, strong aggressive buying, the market goes up. Okay, so let's take a look at some of the Orderflows Trader settings, okay? And you know, there's a lot of tools on here. Do I have, people always ask, you know, what's the best tool to use? Well, there's a lot of different tools, but really what you want to focus on, because, you know, not everybody trades the same market. Not everybody trades the same chart. Some people like to use a 1-minute chart. Some people use a range-based chart, etc. And again, you know, different markets. So it really depends on what you're trading as to what you want to use. But one of the ones that I love to use the most is exhaustion prints. Okay, and I'm going to enable it here, and there's a threshold. Okay, so you can set a number that you want. Default is set to 9, which basically tells you if a volume of 9 or lower, so 9, 8, 7, 6, all the way down to 0 up here at the edge of a bar, that it's going to be bullish if it's a green up candle, or bearish if it's a red down candle. Okay, so you could see here, right, we had a nice, I'll just go back a little bit. Okay, so we had a nice little swing low. Market started going up. You had an exhaustion print here on this candle, but the market doesn't go any lower. And it goes inside and pokes back up. Market's going up. Exhaustion print as the market's going up. That's what you want to see. But anytime a market starts to turn, right? If we get a swing high like here, start to come off, I'm looking for any signs of market exhaustion, because remember, we just went from basically 55.81 all the way up to 91, a 10-point move. Okay, and you know, markets rotate, right? We have moves from lows to highs, swing lows to swing highs, and you know, in the past, it seemed like S&Ps, you know, in the past, I would say like 2 or 3 years ago, S&P rotation was, you know, basically between 3 to 4 points. And now I think it's, you know, now that we're trading so much higher, I think the rotations have gotten bigger, more like almost double that, you know, 6 to 7, 8 points. So it's a 9-point move. So it's one rotation. So I'm looking for any signs of a potential reversal, and I get it right here with my exhaustion print. Okay. And the market starts a nice move down. Now I'll talk about this a little bit later. These are bearish final point controls. And as you see, market is going up, exhaustion print as the market's going up, right? There was one here, didn't cause a reversal. Now, that's the exhaustion prints. Imbalance reversal. I'll just let me turn something on here on cluster. I have, where's the imbalances? Show imbalances. I got imbalances turned off, okay? So that's, imbalance is a tool that's built into the default of GoCharting, okay? They put a few of the tools that we have in Orderflows Trader. I asked them to make it sort of a default, so everyone that's using a cluster chart of GoCharting has access to it, because some of my tools are built around it. And I think that, you know, if you're into order flow, you need something, you know, you need to be able to look at imbalances. You need to be looking at point of controls and value areas. So I've added the value areas. Now what I'm going to do is going to add the imbalance reversal. So first, I will disable it so you can see here, okay? Now I'm going to add it here, all right? So if you noticed it, or let me see if I turn off the imbalance here, just to make it a little bit easier to see. Now you need to have imbalances on, okay? So, where am I here? I gotta scroll down here. Hang on. I don't want to get people confused here because there's two. There's inverse volume imbalance, and there's imbalance reversal. So imbalance reversal is, when you look at, well, let me just start. When you're looking at the footprint, right, you're going to see blue numbers and you're going to see red numbers, right? And you're going to have this box, it's an orange box. And that's a selling imbalance, right? If it's a red number in the bar, if it's a blue number in the bar, it's going to be a buying imbalance. So you have selling imbalance, buying imbalance, right? So aggressive buying, aggressive selling. Okay. I like to have the box in there. You could take that orange box out if you like, if you just want to have, say, the just showing it, right? If here, just showing the colors, if make that transparent. Okay, so it's just showing the buying imbalance and the selling imbalance. Okay, now adding the, close this, imbalance reversal, right? Because you're seeing here on green candles, normally what you're expecting to see is buying imbalances, just as on red candles, what you're expecting to see is selling imbalances. By adding this, you're going to see it's going to highlight to you where there is selling imbalances in the green candles or buying imbalances in the red candles. Okay, and that's important information that you could use for your trading. All right, because again, it's what you're looking for is things that are not normal order flow. If there's not normal order flow taking place, then it's telling you there's probably a big order going through, okay? Or maybe the collective of traders they're slowly changing their mind, because really what order flow helps you do is follow what the big money is doing, right? And the way to think of it is, right? I mean, no pun intended, but the flow of a river, okay, is up. Okay, that's why you're seeing, well, in this case, it's the market trend is going up, right? The flow is going up. You have the buying imbalances. Okay, now all of a sudden you have a selling imbalance on the green bar and the market is still going up. Well, what's that telling you, right? The selling imbalance is basically telling you that there's somebody in here that's chasing the market up or bidding the market up, right? Because it's a strong bid that's absorbing all the selling that's taking place to help move this market down. So yeah, you expect to see buying imbalances on a market that's going up. That's what helps drive the market higher. But what helps to keep the market higher is those selling imbalances, right? That is demand, coming in, people bidding the market to add support, just as if a market is dropping, like here, supply coming into the market to help push the market down, right? To cap it from going any higher. So that's the imbalance reversal. Now, ratios, okay? Ratios is a big part of my trading. And every bar, right, has volume in it, okay? So every bar is going to have a ratio. So there's two. There's order flow critical ratios. There's all order flow ratios. And if it's a bullish ratio, meaning it's a green bar, it's going to have a bullish ratio. It'll appear on the bottom of the bar. If it's a red candle, okay, it'll appear on the top of a candle. Okay, that's in case you're wondering why some appear on the bottom, some appear on the top. It's because what the ratio does, it's reading the order flow near the top of a bar. That's a red candle that's going lower, and the bottom of a bar of a green candle that's going higher. That's why it prints it on the bottom, prints it on the top. Now, like I said, every bar has a ratio, right? Because it has order flow, but not every bar's ratio, again, matters, right? Because a lot of times, the market exists to facilitate trade, to transfer risk from one party to another. But what we've found is there are ratios, certain ratios that meet certain requirements that are critical, that are important for traders. That would be the order flow critical ratios. Okay, so you can see here, bearish, right? Bearish, bullish, as the market is going up. And what makes one critical as opposed to not, or what makes one important as to not? Well, there are certain thresholds, right? If it's above 30 and above, or if it's below 0.69 to 0, it can't be, ratio can't be negative, okay? And how you use it, right, critical ratios, is you know that you have, if it's below 0.69, so if it's 0.69 and 0, anywhere in between there, it's telling you there's price defense in the bar, right? This is price defense, this is price defense. Let's see if there's price exhaustion here. Right, I'm just looking at the critical ratios. Okay, price exhaustion, because it's above 30, this is 33, this is 32. Now, sometimes people ask me, is if a ratio, for example, better to show you here, we'll take a look at 10 years real quick. Here's a 5-minute chart. Sometimes, a ratio might be very big, 314 here, okay, as opposed to 33. 266, right, 52. It's a ratio, okay, so 432 here is not more important than 52, right? Really, what matters is that it's a blue color, right? That it's appearing there as a critical ratio, right? Not that 432 or 911 is much better than 52. No, it's a ratio. So you're just going off of, really what the ratio is, not the intensity of it. Okay, so let's just go back here to E-minis. Let's just sort of run through these. Now, slingshot point of control. This is a point of control setup. Just go back to the cache time here. See if there's a slingshot point of control. I think there's one right here. No, that's a prominent point of control. Slingshot point of control is basically just trying to find one here for you. Okay, like right here. This is a slingshot point of control. So you got two up bars, all right? Let me turn off this, okay? And make it a little bit easier to see here. Turn off that. So slingshot point of control. It's a bullet. It's telling you it's a point of control that's bullish, okay? So you can see here, it will highlight it in green if it's a bullish one. If it was bearish, it would be red color. And let me just put it on here to explain a little further. Every bar has a point of control, okay? And generally, in green bars, market's going up, point of control is going to be higher than the previous bar's point of control. Just as if a market is going down, the point of control is going to be lower in the red bars. Here's red, lower point of control, lower point of control. Here's green, right? Point of control, point of control. Well, this one came in a little bit lower. And what we found in the order flow is when you have, two green bars, the second bar's got a lower point of control than the first one. That's important because what's happening is this market is going up, right? Now it starts to pull back a bit. Not only it pulls back, but it puts in heavier volume on that pullback in that bar, or the bar's volume is heavier towards the bottom, and that you have a lower point of control. Point of control is the price level in the bar with the most volume, okay? And that actually is bullish because it's a pullback. People are buying the dip, and you see the market, went up from in the next bar just from basically 97.5 all the way up to, 1.5. That was a 4-point move just in the next bar by itself. Okay, and again, if you're watching the order flow, maybe you notice it, maybe you don't, right? But having a tool that's highlighting to you that's, hey, saying, hey, you know what? You have something interesting happening in the order flow, you might want to pay attention to it, right? You might want to, maybe you get a nice scalp of a few points. I'm not talking ticks, I'm talking points, all right, in the market. Market weakness, okay, now market weakness, let me just add some colors on here. Let's see if there's any market weakness today. Coming in here, okay. Here's some market weakness right here, right? This is bullish one right here, bearish one up here. Okay, let me expand that out a bit. This up arrow is bullish, this down arrow is bearish. Okay, so my colors, I put them in backwards, but let's see here. Change that to a blue color, change that to a red color. There we go. Bearish, bullish. What it's doing, right, is it's analyzing the delta, telling you that this move up is over, right? It's getting weak. Right? That's why it's called market weakness, and you're going to look for the market to go down from there. Just as here, right, sort of going sideways, but it's telling you that, you know, what's taking place in the market is weakening. In this sense, the selling that's taking place. Now, again, this is a market that's going sideways. It does not giving you much direction, but what market weakness does is it analyzes delta, because delta tells you the difference between aggressive buying and aggressive selling. And if you know that aggressive buying is weakening, chances are the market's going to sell off. Just as if aggressive selling, which is happening here, is weakening, chances are the market's going to go up. And you can see it went up from, you know, this is a 7 in the morning, so not a lot of, you know, I'm on a Monday, so not a lot of activity yet, and market's going down. You got the bullish strength that was here is weakening, and so you can expect potential move down. Okay, so that's market weakness. Whoops. Let me get in here to sequencing. Okay, sequencing. Let me scroll over to the end. Okay, whoops. So there's two types of sequencing. There's bullish sequencing and bearish sequencing. Okay, and it's best seen here. This is bearish. This red. This blue box with the green inside is bullish. So, you know, whenever there's a trade that takes place, right, the volume shows up in the footprint. Okay, and what sequencing does is it analyzes the actual volume that's trading, because, you know, a lot of time the volume is pretty sporadic, right? 54, 137, 31, 70, 177, 220, you know, 224, or sorry, 244. And it's just a little bit all over the place. What the sequencer does is it analyzes, you know, the volume that's being traded on the bid, the volume that's being traded on the offer, and if there is volume, okay, that is subsequently higher and higher volume on the way down, or higher and higher volume on the way up that's being cleared out, that is what we call an order flow sequence. And you can see here 1, 2, 3, 4, 5 levels. It clears that out, subsequent higher volume. So what it's telling you is, you know, traders are taking out more and more volume in a direction. And you see that you had a nice little sell off here. Is doing it again here, this time on the way back up. Okay, and more, and you can see the market had a nice rally from there. Well, doesn't look like it, but obviously went up here. You got another issue, another instance of sequencing taking place here, just about 20 minutes ago. Now, a lot of these tools are meant for short-term direction, right? Because I like to trade more on a short-term chart. 1 minute, sub 1 minute. I just find order flows, because it's measuring the actual order flow that's taking place in the market, and that information is best used as fresh as possible. So the next one I'll talk about is market sweep. Okay, it's right here, market sweep, and you'll see there's a threshold of 25 and a stack count of 3. Okay, now you could adjust these. Okay, but I'll just show you real quick with these defaults, because again, depending on the market that you're trading, if you're trading NASDAQ, 25 might be quite high. You probably want to make it a little bit lower. But you can see here, this is a sweep that's taking place, right? And it'll draw out this little zone over, the next several bars for you, just because when you see a sweep take place, what is a sweep? What's a big order going through the market? Basically clearing out the bids if it's a sell, and clearing out the offers if it's a buy. So here before this move down, well, in this bar, right, there's a sweep takes place. So someone came in, cleared out all these bids here. Okay. Then you can see there's a nice strong offer right on the bottom of the sweep. Someone came in, the market is trading, 87.5, and basically just said, sell it down to, 6 or 6.25 or 6 right here. Just clearing out these things. It's funny because, there's traders out there that think, the institutions are out to get them, right? That they're gunning for their stops, etc. But to be honest, for us retail traders, right? And I used to be an institutional trader for many years. These little orders in the book, if you're looking in the depth of the market, right, the dome, the price ladder, there's just stuff that's in the way, right? So if you're a big trader and you think, hey, it's shit, man, this market's overpriced, I want to be short this. You just come in and you just clean everything out. This 9 lots, the 29, the 22, that's nothing, right? But the small retail trade, oh, they're gunning for my stop. Your stop is too contra. They ain't, right? It's just something that's in the way. We're like ants to the institutional traders. Unfortunately, there's a lot of us, so we're a lot of ants. This is a bearish sweep. This is a bullish sweep. Right? And I like to use these as support and resistance levels because I know there was a big buyer at this level. And to me, it's important to see if it holds. Because if a sweep holds, then I know that, hey, you know what? Maybe now the information is coming out into the market. Because the way information, we all like to think everybody has access to the same information. It's just not a level playing field in that sense. Not everybody has access to the same information. And unfortunately, the game is stacked against us because the big trading firms, the banks have access to information we don't have. They have a staff of analysts, economists, parsing all sorts of information that we rely on Twitter, basically. I mean, we can't, Facebook, forget about it. Forget about watching CNBC or Bloomberg TV. But the big institutional traders, they have access to information that we don't have. And by the time we get it, it's too late. So sometimes when you see a big burst of activity in the market, oftentimes it's preceded by a sweep. It could be somebody got a piece of information that is bullish or bearish for the market, and they're trading that information. It's coming through the market, right? Now, it doesn't mean that every single sweep, bullish or bearish, is going to work out exactly right away. This one just went sideways on you before going up, but you see oftentimes it does give you nice near-term direction. Okay, and then when you combine it with other factors such as, is there buying imbalances taking place? What's the point of control? What's Delta doing? Then understanding the market just becomes a heck of a lot easier. Okay. All right, so let's work through this. Prominent point of control is one of my favorite tools that I ever came up with, I guess. And this is based off the point of control. Point of control is the price level in the bar with the most volume. Now, every bar has a point of control, assuming every bar's got volume, but not every point of control matters, right? I explained that in the slingshot point of control. But you can see here, this is a bearish prominent point of control. It's magenta color. It has this nice line drawn out. Because I know that the volume that's taking place in here is bearish. There's another one right here. And it precedes this nice, 10 point, 15 point move down here, basically from 90 all the way down to 75, even below that. Okay. And there's bullish ones here, bullish one here. It's a bearish one there. It's a nice bearish one here, bullish here. And again, how I like to trade these is, I watch them where they're coming in. Not that there's just a prominent point of control. I like to say, if we're hanging around a high, this is, I believe, our high of the day here, and we can't get any higher, and then I see a bearish prominent point of control come in, yeah, I'm probably going to want to be short. Okay, you see the market is going down, just as up here we hit our swing high. We're starting to come off a bit. I have the exhaustion print here. Got a stack selling imbalance here. I got a bearish prominent point of control, and the market's moving down. Okay, but prominent point of controls is one of the favorite tools that I have in my arsenal. Now zero prints. Okay, now depending on the market, like if you're trading, say, E-minis, you don't get a lot of zero prints, because what a zero print is, it's dependent on the volume, right? And E-minis, we trade a lot of volume. So let me just change the contract just to make it a little bit easier to see. Go to Euro currency. Euro currency actually also trades a lot of decent volume, but what you want to see, okay, let's go here. So there's some zero prints, but let me change it to, well, let's change it to a 5-minute chart. Okay, so here, this is bullish zero print. It's coming in here, here, here. So let me just expand this out. So when you enable zero prints, right, that's right here. For bullish ones, it's going to be a green up arrow. For bearish ones, it'd be a red down arrow. And basically what you're looking at is the print of zero, either in this price level or this one, the bottom price level of a bar or the second price level of a bar. And basically it's bad structure. What's happened is it sort of ticked a little bit lower, and then the aggressive buying came in. And there was no counter trade. That's the zero. Okay, and that's bullish for the market. You see the market had this nice quick jump up off of that. So I don't know if there's any bearish ones here. Here's some bearish ones. Again, right here, coming right off this high up here, right, as we're heading down. Zero print right here, zero print here, zero print here. So the next one we'll talk about is inverse imbalance, okay? And that's pretty easy to see. Well, let's go back to E-minis here. I can keep it uniform on E-minis. Go back to the 1-minute chart. Well, let's go back to the day session where we are right now here. Okay, so inverse imbalance, they'll draw these little arrows if it's bearish, if it's bullish here. Okay, and what it's doing is it's measuring the, well, it's not measuring it, it's looking at the order flow in the bar. And if you have a red candle with buying imbalances, right, it's similar to the imbalance reversal, but imbalance reversal is when the imbalance comes in at a certain spot. With the inverse imbalance, it could come in anywhere in the bar. So on a red candle, you see down here, right, the imbalance is at the bottom. This red candle imbalance is at the bottom. On this green candle, imbalance is on the bottom, but this is actually also an imbalance reversal. So if it's an imbalance reversal, it will still show up. But if it's an inverse imbalance, it could be anywhere in the red candle. And again, what that signifies is supply or demand coming into the market. So when you think in terms of supply and demand, well, what do you know about supply and demand? Okay. So for example, if a market is coming down, right, you expect to see supply in the market, right? So I'm not shocked to see here, right, the imbalance, the inverse imbalance as the market's going down. But now as the market is starting to go up, to see demand come in here. Okay, so that's what the inverse imbalance will help show you, is demand coming into the market. Okay, let me just drink some water here. Now, multiple imbalances, okay? So I put them on, you can see this box drawn around. Now, there's two types of, I'll say two types of imbalances, but on the cluster chart, right, on your regular footprint chart, you have this here, support or resistance, okay, which is basically stacked buying and selling imbalances, right? This is stacked buying imbalance here and here, right? And what that is it's three or more imbalances stacked nice and neatly on top of each other, right? That's what stacked imbalances, right? By definition, they're stacked on each other. And that's good, right? It's a great tool for trading. I mean, if you look at, where they come in, right? You can see here in bullish market activity, there's a lot of stacked buying imbalances, right? Just as, market's about to sell off, stacked selling imbalance. However, there are bars that have what we call multiple imbalances, okay, which is three or more imbalances spread out in the bar. That's not stacked on top of each other. Now, does that mean that stacked imbalances are more important than non-stacked imbalances? Well, let me show you here. Okay, market is coming down. Multiple, stack selling imbalance up here. They got multiple imbalances, multiple imbalances, multiple imbalances, multiple imbalances. Selling imbalances, how do I know? Because these are red candles, so it's looking at the selling imbalances. Well, that's what you expect to see on a market that's moving down, right? Aggressive selling. That's what's helping drive the market lower, right? So you are going to see multiple imbalances on moves down, just as you're going to see multiple buying imbalances on moves up. But this is where it gets interesting, is you come into a low again, right? This is a nice low today, nice trading low for order flows traders. And you got multiple buying imbalances coming in the second bar off the low. Your stacked buying imbalance doesn't come in till another 2 bars later and another 5 points higher. So where would you rather get in? Closer to the low or a little further off the low? Well, you're going to be better off getting in as close to the low as possible. Why? Because that's going to minimize your risk. Because if you're a swing trader and you're buying off the low, what is your stop going to be? Well, it's going to be probably just below the low. So if you're able to buy as close to it as possible, rather than another 5 points away, that's just an extra 5 points of risk. Okay, and that's the beauty of multiple imbalances is, anytime you're up near a high or a low, again, here, right, you got this swing low that was made, then the bar afterwards, you got nice multiple buying imbalances coming in here. Got a nice little trade to the upside there. Got a little swing high here, got some imbalances you could trade. Now the next one, buying tails, selling tails. Okay, now on E-minis, you're probably not going to see it a lot, but on a market like NASDAQ, or let's take a look at YM, mini Dow futures. Just you're not going to, the reason I say you're not going to see it a lot on, you're not going to see it a lot on the E-minis, because the E-minis do a great job of distributing volume. Okay, so that's why you're not necessarily going to see it so much. Okay, but here we go. Okay, so buying and selling tails, right? Disabled, enabled. And again, what a tail is, it's poor structure in the market. Okay, it's telling you this market basically, well, here, I'll just show you the example. This is a tail right here at this swing low here. Okay, it puts the box around it, right? Box, no box, box. Okay, and when you see a tail, especially coming in at a low, what's happened is the market just got sold off really quick and then just snapped back. It's like an order goes through, almost like a sweep, but it's just like, someone sell me whatever, 5 contracts, boom, 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 and instantly he's back up. It just snaps back. Then starts trading higher, right? Next bar goes higher. You can see here, it's just straight up. Okay, this was a selling tail here, but again, this was like right on the cash open. This was a few minutes before the cash open. Buying tail, okay? But really what you want to be looking for them at is swing highs and swing lows, okay? Turning points in the market. It's more of a reversal indicator. Up here, we're at a swing high, a clear swing high. All right, we went up. It's not that every bar that has a buying or selling tail you take. If you're at a swing high, you get a tail developed, that's where you want to get short at. Just as if you're at a low or right around a low and you get a tail formed. I don't know if there's one in here, any bullish ones to show you. Not really. If you have a bullish tail, meaning a green candle with the tail, coming in around a low, you don't want to get long. Just as a bearish one somewhere near a high, you don't want to get short. Okay, that's tails. And let's go back to E-minis. Talk about thin prints. It's another one of my favorite tools. Okay. So a thin print, all right, is volume below a certain threshold in a bar. Okay, and you can see here. This one is set to 5. Bullish thin print, bullish thin print. 1, 2, 3, 4, right? Generally in markets going up, you're going to see bullish thin prints, okay? On markets going down, example here, bearish thin prints. Basically what it is, it's volume below a certain amount, right? 5 in this case. So there's 1, 0, 2, 0, 4. Then on the way up, 0, 5, 3. So, it's a sign of momentum, right? It's a sign of a market that's moving fast, where there's not necessarily a lot of volume taking place in the two-way auction. Now, again, a lot of these tools, you're gonna say, hey, you know what? Why do I need these tools, right? I could just watch the footprint myself and see all this. Well, you could, if you're experienced at looking at a footprint and have the time to fully concentrate. Because, at the end of the day, not everybody has the time to fully concentrate. There's a lot of distractions in the world now. There's your phone, there's Facebook, there's, Twitter, all that stuff. That if you're sitting here trying to make sense of everything that's happening in real time very quick, it could be hard. Some markets trade faster than others, right? NASDAQ, we know, trade faster than others. But if you have a tool that's going to help, all right, so you can just add these things on here. Okay, so look at this, right? Thin print, multiple imbalances, light on critical ratios, right? I can see this bar here. I can start to make sense of what's taking place in the market, right? I can say, well, we just made a swing low, starting to come off of it. I've got a very strong delta, right? That's this magenta color. I've got a bullish ratio, 0.59, it's blue color showing, which indicates price defense coming in. Got multiple imbalances. I've got thin prints, imbalances spread out in the bar. Got thin prints, which is a sign of momentum coming in, right? I've even got, that inverse imbalance as well here. So I've got a bunch of things taking place in this bar. I know that this bar is very bullish in terms of order flow. And where's it coming in? It's coming in off this swing low here. It's coming in at, basically 80, 81, right in here, right? And what happened, right? Market put in this nice big rally, right? From 80s all the way up into the 90s pretty quick. This is just a simple 1-minute chart. If you're on a 5-minute chart, you could even do you can do longer, but you'd be looking at the same things in the order flow, signs of bullish activity or bearish activity, especially when it's all sort of combined together, okay, for the market to keep going up. All right, so it's in my opinion, it's a great tool. Now, if you're new to order flow, okay, we do have a free course that you can download. I made it especially for GoCharting users, so it uses the GoCharting platform. It's a basic course, but what you do is you go to orderflows.com/GoCharting. Let me just show you really quick here. Okay, redirect it here in a second. It's right here. You just enter your name and email, then sign up, and it takes you to the page where you can download the course or watch the course online. It's up to you. I'm going to put the link in the chat here. Let me just get my chat going here. And also, okay, I'll put this link in there. If you go to this page here, orderflows.com/getgocharting. Okay, I'm gonna put that link in there too. You'll see GoCharting's got something for you. So it just takes you here, click on there, go to GoCharting, okay, where you can sign up. And right now the Orderflows Trader Suite, so whenever we release new things, it'll be pushed out to the platform and it'll be included in, so when you subscribe to it, right, any new updates or new additions that we make automatically get pushed out in there, okay? Now, with GoCharting, they do have a special going on right now for the India Independence Day where you get 30% off their annual plan, okay? And you could access India. There's, if you want to trade CME, US products, you also get 30% off. Crypto Forex, also 30% off as well. And again, the Orderflows Trader, which is a third party add-on, you can subscribe through here. So you do need to subscribe to GoCharting because that's where you're going to get your data from, and as well as subscribe to the Orderflows Trader. Okay, so when you subscribe, if you've already subscribed to GoCharting and you subscribe to Orderflows Trader, please use the same email address. Okay, it's that way you can get activated a lot quicker than trying to figure out your actual email that you used for GoCharting versus your email for Orderflows Trader, because sometimes they don't match up, right? Sometimes people have emails like you know, that aren't correlated whatsoever, and it's just hard to get you started right away. So it's just best to use the same um, email. Okay, and like I said, GoCharting has other exchanges as well, right? So for example, if you're a crypto guy, okay, and you're into Bitcoin, right? You see, you got Coinbase. There's the ones that you can use to trade the exchanges. Let me just check. Is Bybit and Durbit, I believe, um, directly through GoCharting. Okay, so you can see there's the contracts here, but it's funny because sometimes I get people, hey, can I use Orderflow Trader to trade crypto? And I'm like, people trade crypto? I thought you just buy it and hold it forever. I know that's what I do. But there are certain tools that I do like to use for crypto. Okay. Now, if you're using a footprint on crypto, um, you do probably going to need to change your tick manager to auto, right? Because crypto trades in satoshis, etc. It's just easier to manage. And again, depending on your chart, this is a 5 minute. If you're on crypto, if you're a trader, I actually have a course on trading order flow with crypto. I would look at if I was going to trade, say a 15-minute chart or a 30-minute chart. I used to keep a 30-minute chart of crypto up, and really what you want to look for is turning points in the market, swing highs or swing lows. Okay, and it's not difficult to identify a swing high or swing low, and you want to basically look at what's taking place in the order flow at a swing high or a swing low, right? I like to look at the tools I like to use. Well, you're not going to use thin prints unless you adjust the volume. I used to use critical ratios. I like to use multiple imbalance, inverse imbalance, and even prominent points of controls. But again, when I'm looking at crypto, I like to look at swing lows or swing highs. Okay, this is a 15-minute chart. Okay, see the inverse imbalance coming in here. This is just sideways. Inverse imbalance there. You can look at stacked imbalances too. Here's a swing high, a stacked imbalance coming in, a swing high, stacked selling imbalance. Then the next bar, you got the bearish, prominent point of control. So there's a lot of ways to do it. I'll probably do a special crypto presentation on this later. But I'm going to take a look at some questions here really quick. Just bear with me here. Toby asks, how do we get a hold of your course trading crypto? Let's see here. Forgot what it was. Order flows. No. Let me dig it up for you real quick here. Um, Bear with me, guys. Here, I'm just helping this trader out here. Oh, crypto.html. This one here. I'll just put the link in there, chat. That's the crypto course. But let me just go through some of these other questions. Could you share your favorite chart template? Yeah, I could, but I'll just take you through the setup really quick. I'm not necessarily, I know traders like to use templates, I'm not always a big advocate in templates because, I like traders to sort of figure out what they like to look at in the order flow. Because at the end of the day, not everybody trades the same, what do you call it? Trades the same market, trades the same chart or the same speed. Like me, I like to trade on, you know, time-based charts. I used to trade a lot of um, range-based charts, but now I'm more on time-based charts. Okay, so my templates change, because as traders we evolve. But just really quick, what I like to use, I like to use value area. If you want to just jot these down, critical ratios, prominent point of controls, um, thin prints, multiple imbalances. Okay, I also keep stacked imbalances up. But the beauty is with GoCharting, you can share templates. I'm just making a note here because what we're going to do with not this week, but in September, once we get a little bit more critical mass going in terms of subscribers, because literally this is like really the first public announcement of GoCharting on order flows. We've sort of had it soft launched, but now this is sort of the big push. I'm going to be doing weekly presentations for the users of GoCharting that are using Orderflows Trader. So we're going to talk about, ways to use GoCharting, and again, you can come in, ask your questions. We can discuss chart setups. You could ask me my opinions on, is this a good way to approach the market? It's going to be every week, I believe. It's going to be me hosting it. It's not going to be, somebody else. So you could ask your questions directly to me. But I'm just trying to find the right time. I think it's, best to do it probably during live trading hours as opposed to evening times because, for some people it's hard and, people in Europe are asleep at that time. But we're going to be doing that starting in September after the US Labor Day holidays. So, if you're a member, you'll be invited to all those sessions. It's free of charge, right? It's basically 1 hour training with me. Okay. And it's just funny because, a lot of times people buy software and they're like, oh, if you want training, that's extra. But, that's going to be included in there. Let me take a look here. So Charles says, please show a chart, how to use range chart with order flow. Okay. What if they're still working on the range charts? But I'll discuss that in a later one, Charles. Okay. Where can I see the dome? Usually on the right side. I don't like to use a dome, but I believe you could add the dome on here. But again, I want to keep this on the Orderflows Trader first. But yeah, you could add a dome, the depth of market. Okay. How to access the Orderflows Trader Premium? Well, first you got to subscribe to it. Then you're going to go to the study area here, and you're going to find order flow, and you just add it, click on it here. Okay. Okay. Tool set window is stuck. Yeah, well, actually, I had the window tool set up there, but I was talking about stuff on the other side. The crosshairs, where the crosshairs was, which should have been helpful. What courses do you recommend for a beginner to trade order flow? There are quite a few courses on your site. Well, the main one, the Orderflows Trader course, is the best starting point to learn order flow. That's basic one. But again, if you can go to what was that page? GoCharting, the one I put in the chat here. This one. It's in the chat. Orderflows go.com/GoCharting. This is a quick 5-lesson course on sort of the basics of order flow as well. This is a free one. You go to my website, there's the order flow trading course. There's is also a starting point and gets into more advanced concepts than you're going to get from this free course here. Nagaraj asks, how do we distinguish all the features mentioned in front of the chart if we enable all the properties? Well, you're not going to use all the properties all at once. You shouldn't, because certain tools are meant for momentum, certain tools are meant for reversals, and it'd be like, uh, it'd be like basically adding up, where is it here? All these different tools from, that are available in the FX study, right? You're not going to add all these different oscillators all at once, even though you got, 30, 47. You're not going to add all momentum tools all at once. You're going to see which ones resonate with you the best and go from there, and again, on those weekly sessions that we're going to be starting in September, you could ask me, what do I recommend for, you got to tell me like how you trade, like what market you trade, what sort of chart you look at, and go from there. As opposed to, it's not just about, oh, I got all of these tools, add them all up. It's not about that. Excuse me. Toby asks, if you want to pay a one-time fee for the Orderflow Trader like you have for this, is there an option? No, not at the moment. There's not an option. We were talking about it maybe in the future, but for now, it's a monthly subscription. Seth asks, can we trade 4-hour, 1-hour time frame using Orderflow concepts and hold the trade for a few days? Well, I'll just pull up a 1-hour chart. Excuse me. Sorry for coughing here. Let me drink some water. Now, the thing is, okay, trading 1-hour, 4-hour, okay, here, right? You can't see the footprint. I'd have to expand it up like this, but there are certain tools that I like to use for 1-hour and 4-hour time frame. However, I'll say 1 hour. I honestly, I've never used or never even looked at order flow on a 4-hour chart, because order flow, in my opinion, is best used as fresh as possible. Okay, because you want to take advantage of the anomalies that are taking place in the order flow right now, right? You don't want to be waiting 4 hours, 5 hours, um, for something to start to play out. This is a 1-hour chart. Okay, now you can see things like thin prints, right? Obviously levels that are holding for a period of time. Let's just look back to sort of yesterday or not yesterday, but last Friday. Okay, so obviously we had the data coming out, but you can see like this is a thin print here. Okay, probably some multiple imbalances, stacked imbalances coming in here as well. So, in my opinion, again, I think order flow is best used as quickly as you find out what's happening in the market. But again, if you're looking at things like the deltas, right, there might be some information you can glean off there. But for me personally, 15 minutes is about as long out as I would go. If you type in order flow in study, you'll see a normal one, and then the Orderflows Trader Premium. I'm asked about the premium version, and does it include the new upgrades that you ever released? Yeah, the premium version has what we have on the new version of NT. Okay. Order flow can be used for swing trading for months time holding. Generally, no. Okay. Honestly, Hitesh, I would love to say yes, but in my opinion, no. Okay. It's just not, because there's a lot of information that's coming in. Really, order flow is meant to be used on the shorter term, for day trading, for intraday trading, scalping, not necessarily for longer term, holding, okay, in the sense of months or weeks or anything like that. So for example, right, this is Swiss franc on a 1 hour chart, okay? Let's just go back to where we are here. Now you can see, right, there's a lot of bullish information, right? These are probably imbalances coming in here, bearish information, but it's constantly changing, okay? All right, guys, how do I get access? The last question here. Arga asks, how do I get access to the Orderflow Premium Indicator as it is locked? You have to subscribe to it. So again, to subscribe to it, I put the link in there, orderflows.com/get GoCharting. You just click on this link here. So you see, right, just type in orderflows.com/GoCharting, because they did prepare me a special link. It's a little bit long. So I created that special page. And then once you sign up, or you could just go to the pricing page if you already have an account, and you can subscribe from down here. But you do need to have a GoCharting account to subscribe to these indicators, okay? And then once you do, once you subscribe, it will send an email out to GoCharting, the admins, and they'll add you in there, okay? All right, everyone. Thanks for coming out. It's a Monday. Well, for me, it's a Monday. And again, I appreciate your time, and hopefully you guys have learned a bit more about the Orderflows Trader on GoCharting. I'm trying to find a time to do another one of these presentations, just to get a little bit more in depth and get you a little bit more comfortable with it. So hopefully towards the end of this week, I could get another one of these scheduled for you guys. So thanks everyone, and have a great rest of your day. Bye-bye.